Time to break down the tariff news in our own newsletter that we compile ourselves every morning. Links below if you want to follow me live and get it for tomorrow's news. The S&P selling off. Why? What's going on? Well, we've broken it down for you and we've given the opportunity to find the best positions of what to invest in and how to navigate this. As you can see, the very opposite is happening to XRP. That's up today, but tariffs are down and bringing the markets down with them. So this is our very own newsletter. It's in the chat for those of you watching me live right now, and I'm going to give it to all of you watching live later on as a video in the chat below in the description and in the comments pinned as well. There is the newsletter for everybody in the chat right now. So what's going on? Here's a deep dive on it so you can understand it and apply it to your own strategy. Because if you understand the overall markets, you can win. This is how I've outperformed everyone this year, which is Robinhood managed funds, Berkshire Hathaway and the S&P by buying undervalued, not just dollar cost averaging. That does not work. So what's happening now with a deeper dive into tariff triggers how Trump's August 1st deadline withdraws the investment map. That's what we want to know. So Trump pushing his tariff ball up the hill. President Trump's global tariff threat is more than a headline. It's a structural pivot. The August 1st deadline transforms a policy threat into an economic inflection point, marking the most aggressive U.S. trade posture since World War II. Investors must now assess not just financial fundamentals, but geopolitical alignment and supply chain exposure. Who said investing was easy? Right, tap the like button and share this out to more people and consider subscribing to our channel. We're live all day, every day, try to provide you the best, most honest news in the world. Again, as always, the information we provide in our newsletters is for informational and educational purposes only and does not constitute financial advice. Always do your own research, not financial advice. We are just helping you. We're giving you our thoughts of how the markets will react to all of this. All right. And you all know I took all my positions, sold all of my S&P with margin at the top, outperformed the market. As you can see, if I show you my position year to date, and then over the last 3 months, I'm up 49, 50%. I outperformed everything. Why? Because I bought with conviction on Liberation Day, that big dip, and I now cleared all my margin in preparation to what is about to occur. A carry trade potential and a tariff chaos once again. So, strategic delay, maximum leverage. Trump's extension to the tariff implementation from July the 9th to August the 1st gives countries a diplomatic reprieve, but keeps the economic pressure on. Treasury Secretary Scott Bessent confirmed that letters will be sent to 18 major economies over 100 smaller nations at 12 p.m. Eastern Time on Monday. That's happened. That's out. That's done. Warning that tariffs will boomerang back to April levels if no deals are reached by August the 1st. The markets are using this to sell it off. This is a buying opportunity if you are patient. Don't just buy the first little dip. You have to have patience. The economy is overbought again. We're at 25 times earnings on the S&P. We want to be back down at 17. However, we're not going to be there now because we are now re-evaluating the valuation of the S&P because of crypto and AI. Maybe 18, 19 is a good undervalued position. It's never going to be undervalued, of course, because we're always buying the future, but maybe that's a good position. Rather than abrupt disruption, this staggered rollout introduces a countdown clock, buying time for markets to adjust while escalating diplomatic urgency. The Fed held hostage. The tariff uncertainty has effectively frozen the Federal Reserve. Jerome Powell openly acknowledged that the Fed would have cut by now, were it not for trade tensions. Fed funds futures now show a 6.7 chance of a July cut. I said we should have had a cut in June. I will now say again in July. It is due. It is due. It is due. Even 0.25% would be a signal, a positive signal, but it would not inflate inflation. It's not enough to do that, but it would be enough to move us in a positive direction. Everything is in the way of itself now with the tariffs. Once again, who is bored and sick and tired of the word tariff? I should do a poll in my chat right now. Who is sick and tired of the word tariff? I know I am. Fed fund futures now show a 6.7 chance of a rate cut in June, down from 23.8% a week ago. I haven't changed my opinion. I don't in and out of it like that. I made my decision and I'm making it. Unless news changes. Well, it hasn't. When I make predictions, I base that upon volatility and uncertainty. You can't have everything laid out in front of you. Otherwise, we'd all know what we were doing. We'd all make money. No one would ever lose money, which means nobody would ever make money. It doesn't work that way, does it? Core inflation projections are rising. 3.1% by year end, up from 2.8% in March, while growth expectations for 2025 have been cut to 1.4%. That's a stagflation setup investors dread. Supply chain realignment underway. Machinery, 77.9 billion. Trade deficit. Electronics, 66.6 billion. And vehicles, 55.7 billion. Top the list of vulnerable imports. Importers are front loading shipments, rerouting logistics, and raising prices. This isn't temporary. Industrial real estate demand is spiking as firms shift operations to friendlier jurisdictions. That is a concern. America are losing friends. BRICS blowback. Ideology meets trade. Trump's declaration that any nation aligned with BRICS anti-American policies will face an additional 10% tariff escalates the stakes dramatically. As we talk about it, the markets are still going down. XRP is still holding up. Bitcoin going down. Bitcoin is following the market. XRP is holding strong. With BRICS now accounting for 44% of global GDP and over half the world's population, this turns trade policy into geopolitical leverage. Investors now price in the BRICS premium, weaker currencies, sovereign yield spikes, and discounted equity multiples for exposed companies. Deadline flexibility equals market ambiguity. I like that, Sensei. Nice words here. National Economic Council Director Kevin Hassett said extensions are possible for countries engaged in earnest negotiations, calling August 1st a goal, not a hard stop. That adds subjectivity and volatility. Political favour becomes a factor in tariff exposure. Countries like India and the EU may benefit from leniency, others may not. As we come to the end of our tariff news, please do tap the like button, consider subscribing. I made this during a live show and you're watching it later. Wait to the end, I'll give you all the links that you need. Investors' playbook, survive and thrive winners, US-centric manufacturers. Protecting from foreign competition and poised to absorb demand shifts. Logistics and infrastructure, benefiting from rerouted global supply chains and warehousing demand. Losers. The losers are multinational reliance on BRICS or import-heavy inputs, squeezed by rising costs and political risk premiums. Emerging markets with BRICS ties facing outflows, FX depreciation, and investor skittishness. Bond market implications. Now, this is the issue we're all talking about with the carry trade and everything else. The market is now trying to come back up again. It wasn't low enough. Certainly not selling it, not buying it at these levels, just letting it play out as it always does. You can't make the markets be what they're not. Bond markets. Volatility in treasuries reflects this uncertainty. Tips as short duration bonds may offer protection while central banks remain on pause. Global trade from integration to fragmentation. This isn't a temporary detour, it's a regime change. The World Trade Organization projects global trade volume could decline by 0.2 in 2025, with deeper losses if tensions escalate. Global diversification strategies now face headwinds. Investors instead, investors must, this is what we have to look at, prioritize geopolitical alignment over cost efficiency, shift to domestic exposure and allied market themes, and reevaluate FX risks as currency moves track diplomacy, not just data. Now, we did mention this earlier. This is important because we've got some major events happening soon. Bank of America for XRP coming up. These are all the things. July the 7th, that's happening as we speak. The BRICS Summit, that's happening live right now. Tomorrow, we've got Australia's cash rate decision. TRUMPS, July the 9th, Trump tariff deadline. China, New Zealand, Malaysia, the US. On the 10th, we've got Korea, we've got the jobless claims, and then finally on the 11th, on Friday, that we're covering out this week, we've got the GDP, industrial production and trade, and Canada employment report. These are all important things for us to look at. Okay. Thank you, Sensei. A fantastic job, as always, on your newsletter. Let me go back over to my main account. I've got to use my face to do that. There we go. XRP is rallying again. We like it. The overall portfolio is still going down. We're not buying it. So thank you very much for watching to the end. Click above my head for all the links. Down below in the description. Over here, there'll be more links for you. We're trying to raise millions for charity as well and help those children, lost children in Kerrville, Texas. I have connections down there. And please subscribe to my music channel to help me raise money for those families. Over here, I shall put more videos that I think you'll find useful over here and over here. Until next time, as always, take care of yourselves and each other.